All right, ladies and gentlemen, I hope you had a wonderful day. We have the final Fed meeting of the year tomorrow, and I know I'm setting myself up with this title because not everyone's going to watch all the way through. They're going to come back on the next day and say, but the stock market is going to go down. Yes, I have an explanation. We're going to go over what to expect. I'm going to break down what you really need to be watching tomorrow, and hopefully I could simplify it for you. I even got a couple of plays, but depending on what we get tomorrow, it should be a very big day, even though the CPI today, it came in. If you watch yesterday's watch list, scenario number 4, it was all in line, off by maybe 0.1. We barely did anything, and then by the end of the day, it kind of squeezed up just barely above where we hit on the second candle or the first candle right when the data came out. So, Chad, we got a lot of things to talk about. I got the plays. I got the recap. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will be live for Powell. It is at 2 p.m. for the FOMC release. At 2:30 p.m. Eastern time, we will be live on stream, streaming Powell and getting everything live as it happens. So hopefully we see you there, but run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, there's not much to talk about with today because the fact that it came in so at the numbers, it has all been the setup, and everybody is looking for tomorrow to be that final confirmation. The only thing I would say before we get into any of the Fed stuff, tomorrow morning, 1 hour before the bell, you will be getting the PPI, and that has a big possibility of moving the bonds. But once again, after any big data, everyone's waiting for the Powell follow-up. So as far as the keys and what you need to be watching for tomorrow, thank goodness all of the action is going to start at 2 p.m. You do not need to wait for Jerome Powell. Why? Because at 2 p.m. they're going to release the statement, and alongside that statement is the summary of economic projections. That is the abbreviation for the SEP, or that's the full thing. SEP is the abbreviation, but that comes out right when the FOMC statement does. We will get the dot plot. You'll see all of the other factors that are associated with it, but instantly you should get a reaction. And after that, depending on the first move, everybody's going to wait for some clarification. Now, like I'm saying here, the SEP is going to be the main event. What you need to be watching for is the dot plot, but literally what you really need to be watching for on the whole summary of economic projections, it is the Fed funds rate. If you don't know how to read a dot plot, don't worry about it. Why I'm saying that? Because this is all part of it. This is the whole dot plot when you scroll down, but the real main thing the dot plot is going to be showing us, it is the projected appropriate policy path and where the Fed sees the federal funds rate going to be at. So what happened at the last meeting, it came in at 5.1 when prior we were expecting 4.6, and then you could go see the dot plot to really interpret it, but this is what threw everybody off, and this is what caused that volatility at the end of September. So quite frankly, the dot plot gets all of the attention, but really what you want to be looking for is 2024, where do they see it ending? It is the top one, and what comes in below is the previous month projection. So in this case, you're going to see tomorrow, you'll see a 5.1, and then we are going to get the new projection. So this is the big thing, but one thing I have to add to it, you could probably see it at the visual, but I'll make sure you get it in writing alongside that Fed funds rate, also known as the terminal rate, where rates will be at the end of the year. There is also going to be unemployment expectations and then the GDP and PCE. Now, granted, everybody is focused on rates ever since that bond blowout. The bonds have been the main focus. Where are rates going to end? But everything else here, this will tell a lot and it will paint a full story. So you're going to see where the Fed is expecting PCE to be at, but especially unemployment. Remember, last time they lowered it. So they raised their terminal and then they lowered unemployment last time. That is what caused that dynamic that we saw. And I would bid thee to watch this tomorrow, because we may well get an update on unemployment, and maybe that is the main thing everybody is going to be focusing on. So that is the first key. This is going to be the simplest thing to watch for. All you got to do, 2 p.m., go to this chart. It's on the Fed website and see what it shows us. But as far as key number 2 now, I want you to understand currently where we stand, the market is pricing in that rates will be at 4.5 or even lower by the end of 2024. Like I shared with you earlier, 3 months ago, the Fed said it was going to be at 5.1, and the 3 months before that, they said 4.6. It has been on an upward trend, but where the Fed futures are, the market, they are saying that we are going to pretty much be at 4.5 and lower by December 24. It's even worse than that, honestly. Again, I'm being very generous with the whole 4.5 to even like 4.7, but you could see the Fed is at that 5 to 5.1 or so, and currently on the Fed futures, that's a 1% probability. Even last week, it was a 0.2% probability, and that's what everybody was getting really bullish on all of these Fed futures. So to give you another visual, and it explains the last thing that I wrote down here, these are where everybody's dots were. Again, the market right now is saying we're going to be at like 4.5 and below. There was only 2 Fed members that were expecting that last time. Essentially, if we are going to get a lower terminal and a terminal that matches up with the Fed futures, you would need almost every Fed member So we'll talk about that a little bit towards the end when I share with you what I'm expecting. But the final thing you need to be looking for tomorrow is the statement changes. So again, before the dot plot, that only comes out every 3 months. The summary of economic projections, that statement, that's the written statement where they say we decided we raise rates or not, and then they incorporate a couple of things. And this is usually the pre-written statement that Powell is reading out for the first like 10 minutes or so of his press conference. So people are looking for statement changes tomorrow, but the way that I'm looking at it is I think it will only arrive in the form of how they discuss unemployment. On the last 2 meetings, they were talking about job gains slowing versus moderating. We may get changes there, but like I shared with you earlier, I think a lot of people are ignoring how the Fed is going to be viewing unemployment. Maybe this starts to emerge its head in the discussion this time around, and if there is going to be any statement changes, I do think this will happen. I'll throw an olive branch to the bulls here. If they say that inflation isn't high, or that there's like on the last meetings or every other statement they were saying inflation is still much too high, inflation is still much too high. If they change that part of the statement, that will be extremely bullish. However, the likelihood of that is not too high. So now I hope you guys are ready. Understand it. SEP tomorrow. Watch out for unemployment and any of the other factors. Understand where the Fed futures are now and what it would require to get a big change on the dot plot. And then finally, I'm going to give you my final thing. I told you, I am thinking we go down. Maybe it's a day delayed, and I'm not saying we have to crash tomorrow, but I am expecting a hawkish tilt tomorrow. I think Powell is going to address the super core, that housing inflation after the data we got today with CPI. I think he's going to mention it. Market may get a negative knee-jerk reaction, but that's not going to be enough to make it go down. I like what a lot of Chads have been saying this week, and really, I think the dot plot from last quarter, it was obscure enough for them to keep hiding behind it. And what I mean by that is that it's barely going to change. Maybe we get a couple of members moving, but like I told you, last time we thought the dot plot was going to go down, the Fed raised it by 0.5. Why? Because it's obscure. They could hide behind it. And what does Powell and the whole fun bunch say afterwards? They're like, well, just a dot plot, just an estimate, and it could change, and maybe things move around. I don't know. So it's an estimate, and not everybody's a voter, so it's just an estimate. So I wouldn't be surprised if they try to hide behind that. I think Powell's words and the statement, how he answers questions, I think it's borderline going to sound exactly the same. If anything, I think the hawkishness is going to arrive through the dot plots staying high, or just even the same and not going down. And then during the press conference, everyone's going to be just debating, all right, well, if the dot plot's not moving down, do we believe him or not? What did they say about employment? They're going to look at the GDP and they're going to start picking apart everything else. But then everyone's going to have to debate. Maybe people move or they don't. Maybe they wait another day. But then we got to debate on repricing or not. And what do I mean by repricing? That's why these Fed futures are so important. Like I'm telling you right now, if anything, by thinking we're going to be at 4.5, look at for 2025 on the dot plot, the market is about 1 year ahead of the Fed. So Powell said higher for longer. We'll see how he sticks to that, and I think he will, but he doesn't need to change his tone. He doesn't need to fight back. He doesn't need to support the bulls, but if this dot plot is as weird as it came out last month and obscure enough, maybe you get a couple of changes here, and these two dots, just keep in mind, big outliers are going to affect that median to a degree. That's why they use median and not average, but in general, there's like a couple of these four members, the two bottom ones and the two top ones, how they move those around, that's where we'll maybe find a lot of the action. So we'll see how it plays out, but that being said, I am expecting a hawkish reaction out of tomorrow, but the best part is nobody knows what's going to happen. That's why this event is so hyped. You have analysts across the board. Today, we got a crash course in everything, hitting the economist mark right on the head, but tomorrow is going to be a little bit more difficult, and this will be the confirmation. End of the year, we won't hear Powell till like the end of January. You won't get another SCP until March, and this is really going to set the stage of 2024, and it is Powell's last chance to leave you with any good Christmas note or call, so I hope you're ready. But Chad, I still got some plays for you, so now let us get into the plays. So, right off the bat, I got a couple of different plays that I want to go over, and I'm going to start with the main one that we had yesterday, and that is KRE, the regional banks. I said, what's better than the Russell? Ice cold. It's KRE, man. This is part of the cyclical plays. They are getting to that point of where they were at SVB, but the way I'm looking at it, it's like a ghetto rate hike play part 2, if you remember the ARC play, but this time, this one has a premium. We hit the ARCs early. That was a beautiful play. It was before anybody was talking about the cyclical stuff, and now you've seen how it played out. If we get good confirmation tomorrow, even if it's not too bad, banks may still be able to go up. Again, banks kind of want stability here. That's why I said it here. Maybe we get things returning back to pre-SVB times. At the beginning of the year, the banks were loving rate hikes to benefit off of it until we found out that they had all these held-to-maturity losses and things got bad. So I do think KRE, it's at a breakout point. I think the banks will benefit off of easy or policy being tight and not getting bad enough to destroy their balance sheets. It's borderline the OG cyclical, especially if we get back to that time. So as far as the play, I did decide to act on it today. And what I decided to go with, I went with an option play. And why did I grab that instead of shares? Because I don't want to be exposed to the downside. I only have a $500 risk on here. That's the beauty. I got a little bit of time. This will even take us into next year. That's borderline my logic. These plays are really risky. If anything goes wrong tomorrow, or if the banks have any more trouble, you're going to have a lot of problems. Even though I'm still holding the Bank of America plays in Citi, I don't want to deal with any more. Option could give us a good amount of upside, even if the premiums are jacked or not. But at the very least, I want to get my hand in the cookie jar without exposing myself too much. So what I decided to go for was the March 24 $59 calls. I grabbed 15 of them at 34 cents. And now, why did I go with this strike price? I mainly wanted to go for the time. I noticed that these premiums were lower. Like I said, they already came up a little bit, but $59, it's like right below the bottom of the beginning of the year. Again, bonds in a lot of places, if you are going to get a recovery, I feel like your lows or where you started at the end of the year is a good place to break even. So that's why that strike price really stood out to me. But in general, it's this broader play related to cyclicals, banks. If things go good, we break out. If everybody melts up, then the banks getting past SVB and attracting all of that cash you see on the sidelines, this would be an area that would get that attention. And by having enough time, we can make sure we could get any of the juice coming into next year. So that is play number one. I hope that one helps out, and hopefully it doesn't get too crowded. We'll see how that ends up playing out. But as far as play number two now, this one, I really like this one. I don't know. Maybe I'll add it to the long term, but Procter & Gamble. We talked about this for the long term today. People are saying, well, no, I don't want a long term because everything's too expensive, and then it was only 7 stocks if you didn't buy them, this and that, but at the end of the day, there was a lot of crazy moves this year, from small caps to big caps. Yeah, the Magnificent Seven took over all of it, but we talked about Procter & Gamble a lot. This is one of those plays everybody knows about, and believe it or not, they were trading a lot higher at the beginning of the year, and now they are lower. You could get this play at a discount. That's why we talked about it in the long term, but I'm also liking it for the short term because it could benefit as both a defensive staple stock, and at the same time, though, they could benefit off of any sort of cyclical rally as they have in the past. So I think Procter & Gamble, this could be a good short-term play, especially if you notice Dow outperforming or other things, and we're watching this kind of do its own thing. I wouldn't forget about this name. I think I did for most of the year, but now it's back on my radar, and I am definitely going to be keeping an eye out for this one. But that is play number 2, and then finally, play number 3, ladies and gentlemen. This is one for the long term, but maybe watch it out for the short term. Walgreens. There's volatility. They announced today, not only is it coming out right after their dividend payout, but they announced that they're looking to spin off Boots. You may have heard this in the past, especially if you've held this stock in the long run, because they talk about this every couple of years. They said today they want to do an IPO for about $7 billion in London, and this is good news. It gets the stock moving, but oftentimes this stock will die off quickly. So if you go over the chart over the years, anytime they brought up the Walgreens or the Boots spinoff, this stock has gone absolutely crazy, but most of the time it's short-lived. Sometimes the pops are smaller, sometimes they are a lot bigger. I got to pull it back a little bit, but it was like around 2018. Anytime they started to die, they really bring this up, and then they have like CEO changes and a lot of stuff, but I swear every single pop on this stock is because of the Boots spinoff. So we've heard a lot of crazy things. I definitely think it's interesting, but the fact is now they're at a big low, so they might need it, and maybe this one has a little bit of juice this time. But I think with volatility and even how it's traded the last couple days, this could be a good watch to watch with everything going on. But besides that, I still don't want you to forget, we talked about puts yesterday. We talked about IBB. I think all of those plays are going to apply, so I'd keep your eyes out for them. And again, I did do a short on the ES towards like the middle of the day. I thought it would come down. I didn't think we'd melt up after the CPI. I thought we would have stayed within the range and then kind of chilled off. We melted up a little bit. I'm either going to sell out before Powell. Maybe I'm down to ride it with some of my bearish bias. We'll see how that comes in. But like I'm saying, I think tomorrow will go down, but I'm not thinking like crash go down type beat, if you know what I'm saying. So we'll see how that ends up materializing. Besides that, I did another average down on the ZB. I did go for another 30-year bond. That was after the 30-year bond auction came in good. So that one, I have the flexibility to sell out ahead of Powell. If I have enough cushion, I may be down to ride it. But I think with that play, depending on how Powell could play out in that dot plot, that could eliminate gains so fast. I am more likely to cut out of that bond play before Powell than that ES short. So we'll see where it takes us. But Chattadonia, that's pretty much everything. Let me know what you're looking at, but I'll see you there in the morning. It's going to be an exciting one. And welcome to the last Fed meeting, baby. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember your faith, your beliefs, all the things you learned. They didn't make you so rich to the point where you don't treat people good, baby. Don't you ever forget there's a cost with everything as well. Inflation is all around you, and keep that in mind in the next year. It goes beyond the prices. It goes beyond the CPI. Get what you want and put in the work, baby. I'm knocking all these water bottles, but Chad, I love you. God bless you. I will see you in the morning and the afternoon. Have a wonderful evening. Get that rest, and Horna.